A-team. In this video we'll be analyzing the market for gold, also known as Xauusd, from a technical perspective for 14 till 18 December. So let's begin. We are currently on an 2 hourly chart, and here on my chart I have already drawn the support and resistance zones. Here, when zoom into the charts, first we will pull up the Fib retracement, and on a 50 percentage of Fib we can easily see that the market was trying to take the resistance, and the market did closed on a 4 hourly and on a day chart above the 50 ratio of the Fib, which is a very pivotal point on the Fib. However, the market didn't last around the 50 ratio, and suddenly just the market closed above that. We have seen a significant sale off entering in the market just after the market closed on in Fib retracement, thus suggesting or giving us a sale signal. However, we can see that the market has been trading for the previous week in between the Fib ratio, which are 38 and 23, and the market on Friday did try to close above 38. Now coming on the technical perspective, here what we can see that this was a major support. This was a major support. This particular support zone, which is in range of 1858 till 1853, was a major support and resistance zone, as in the previously or in the history we can see that the market has taken this support on a huge sale off. Also, here we can see when the market did experience a huge sale of, the market just only took in support from this range of 1858 till 1853. Then again, after a huge sale off on 11 November, on 19 November, the market did took in support on this particular support trend line. Thus, from a technical perspective, I was bit sure and I was more bullish for the market for the gold. However, due to the fundamental reasons, the market didn't hold up above this particular support zone, and we did see a sale of entering into the market. From a technical perspective, I am bullish on the gold. However, talking about the fundamentals, as my second video, which would be the link would be in the description or in the card would be placed in the end screen. Do watch that and do watch the video till the end. As on this video we will talk about the technical, and my next video would be on the fundamentals. Do watch that out to analyze what we are expecting for the market. Now returning on to the charts, here we can see that the market took in support from around 1767, and the market did given huge bullish momentum, and this bullish momentum was only and only possible for one for a technical perspective. We were expecting a support from this particular range of 1770 till 1764, and from a fundamental perspective we did see that the talks of stimulus packages has been started. However, coming onto the charts back here, what we are expecting is that the market would be trading either sideways, or we would see a sale off coming into the market in the next week. Now coming on to the fundamental patterns, what we can analyze and where we should trigger our long position is that we on an this are in minor support and resistance zone, which I am drawing, and this would be our entry trigger point for the market for the 14 till 18 December. So here we can, let me change its color so it's easy to identify. Let's change its color to red. Here what we can see is that the market was taking resistance somewhere around 1842 and the market was taking support somewhere around 1826. Now coming on to the previous week on the Monday opening, what I am expecting is that I am expecting a sale off in the market for the gold, and what we can see in continuation of this sale off entering in the market, and we can see that the market on a Monday opening can close on a Monday session can close below this particular resistance zone, which is somewhere around 1826. Thus if we did see a close above this particular resistance zone, that would be an entry to go point for going long. Our entry to go point would be somewhere around 1842, with our stop losses would be placed somewhere around 1833, with our take profit of this particular support zone, which would be somewhere around 1856. This trade will give an extra reward of approx 1:1. Now coming on to the bearish scenario, is that if we see that the market did close below this particular support zone which I have drawn, thus market closing below 1825 on an 4-hourly or on a 1-day chart, that would be an entry to go point for going short for the market for the gold, with our take profit of this particular support zone which is some around 1810, with our stop losses would be placed some around 1834, with our entry to go point would be 1824. Thus this trade will give an extra reward of approx 1:1.3. This is a short term trade which would be placed on Monday or on a session on Tuesday. Now coming on in long term trades till Friday, going on a higher time frame on a 4-hourly chart. Here first identifying pattern, what we can see on the charts. Let me move my drawings. Yeah, that's perfect. Now what we can analyze or what we can identify is that we can identify our resistance zone, which would be like this. Let me change its color to sea green or to red so it's easy to identify. This would be the resistance, and this would be the support. Now here on a 4-hourly chart we have identified a symmetrical triangle pattern. Thus a break above this particular pattern would trigger a long position, and a break downwards on this pattern would trigger a sale position for the gold. Again what we have explained, that we are expecting more bearish momentum entering in the market. Thus what I am expecting is that the market would definitely close below this particular support zone, and that would be a trigger for going short for the market. Now another pattern what we can analyze or what we can see, let me first remove my drawing. We can identify that the market is trading in a descending channel. Let me highlight the resistance and support of the descending channel. This would be the particular resistance. and this would be the support. This would be the particular support. Now here on the chart what we can analyze is that whenever the market did test the resistance, we did see and sale off into the market testing resistance on 4 November, a small sale off, then a bullish momentum, then market retesting the resistance on 16 November, a sale off, and the market retesting the resistance on some around 8 December and sale off entering into the market. Thus, according to me, a great position to go short on the market for the gold would be a retest towards the resistance. A retest towards the resistance. That would be an excellent position to go long, or a place to go long that would be also testing this particular resistance, which is in range of 1858, 1853, which is a very major resistance, and this particular resistance trend line which we have drawn off on descending channel. Thus, for me, an ideal position to go short would be this opportunity, with our take profits would be placed onto the support of the descending channel, which would be some around 1802, with our entry trigger point would be some around 1856, and our stop losses would be placed some around 1870. This trade will give a next reward of approx 1 ratio 1.3, 1 ratio 3.72. And now coming on to the long positions, after expecting or after seeing this particular sale off, either from retesting this resistance or continuing the sale off on the Monday opening, the market retested this particular support zone. That would be a great opportunity to go long if the market hold up this particular area. That you would be notified in my daily forecast for the gold. So our stop losses for this particular buy would be placed some around 1789, with our entry trigger point of 1801, where our take profit of sale was placed, and our stop loss and our take profit would be placed some around in middle of the descending channel, some around 1831. This trade will give an extra reward of approx 1 ratio 2.5. If you are new to the channel, so do consider subscribing. If you like the video, do like, share and comment below. Thanks for watching.